founder and CEO of the company, and we started this company in 2003, and our thinking was very simple. We'd like to acquire some silver and gold assets before the price of silver takes off. Looking back, our timing was pretty good. We've built now a mid-tier silver and gold producer with 3 operating mines in Mexico, and we have one of the most compelling organic growth profiles in the silver mining space, with now a development pipeline of 3 new mines to build over the next 3 years and grow our production by more than 50%. So without further ado, Endeavour Silver. The cover photo shows the entrance to our 4th mine. We made a production decision in July, started work on that entrance in August. That's a photograph from late October, and the mine will be operating in March. So a very quick turn on this from making a decision to build to seeing our first production and metal sales by the end of the first quarter. Building new mines, focus on growth. I will be making some forward-looking statements today, so you are duly cautioned. And I touched on the fact that we're a mid-tier producer on track to do about 8.5 million ounces of silver equivalent production this year. That's 5 million ounces of silver and 50,000 ounces of gold. We have these 3 high-grade mines, and we're going to roll out 3 more mines. Where did they come from? Well, we used the bottom of the bear market to acquire attractive silver and gold projects at dirt cheap prices, and that's where these projects came from. So the El Compas mine, our example of a strategic acquisition, that's mine number 4 that was on the cover photo. That mine was purchased 18 months ago for $6.7 million in stock. The total capital to put it into production is less than $11 million over a less than 9-month period. So that's very typical of what we do. We recognize opportunity, we pounce on it, and then we bring our money and our expertise to work on unfolding the full potential of these underappreciated assets. When you buy old mines in historic districts, though, it does take a certain operational expertise, and we've developed our own 13-year track record of reactivating old mines, modernizing old mines, and ultimately expanding them to become core assets. We also acquire mines that typically have no reserves, and it's critical that we know where to go to find new reserves very quickly. And so we've developed our own exploration expertise with multiple discoveries in these old districts since 2004. All that adds up to the best organic growth profile in the silver mining sector. All our core assets are located in Mexico. The 3 operating mines are Guanaceví in Durango State, Bolañitos and El Cubo in Guanajuato State. I like to show our track record for finding silver and gold because it bears on our ability to find more going forward. You can see 9 consecutive years of tremendous resource growth, organic resource growth through the drill bit. The gold bars are gold ounces, the silver bars are silver ounces, and the red bars are silver equivalents. We peaked in 2013, and since that time we've basically flatlined our resources, simply focusing on replacing reserves during the low metal prices of the bear market. But now that it's clear there's a bull market coming, we're back focused on growing our resource base again. That kind of resource growth allowed us to deliver 10 consecutive years of strategic production growth. We were the fastest growing silver miner in the sector up until 2013. However, with the crash in the metal prices, we took our foot off the accelerator and actually tapped the brake. We allowed our production to decline somewhat. We didn't see the wisdom of mining more and more silver at lower and lower prices. But again, because we believe there's a bull market just around the corner, it's time to grow again. Some great highlights from our Q3. We made money. I think there was $1 million in earnings. We had a positive trend of our earnings, cash flow, EBITDA, and revenues all up quarter on quarter. And part of that, though, was that we had a difficult start to the year. One of our mines has been misbehaving from January all the way through July, but we've resolved those operating issues, and that mine is now bouncing back. The other 2 mines have been doing great this year, either on or ahead of plan. And so let's move to the operating mines now. I mentioned we had one mine that was giving us some problems this year. It's our first and oldest and deepest and one of our highest grade mines at Guanaceví. This is a picture of the leach plant at Guanaceví, and we are producing doré bars here at Guanaceví. It's the only mine that actually produces bars. The other mines produce concentrates. What happened at Guanaceví basically about this time last year, in the deepest, highest grade part of the mine, we broke into a boiling hot spring. And of course, you can't mine in the hot springs, so we had to allow that area to flood. We then made a commitment in January to spend $2.5 million to completely overhaul and expand our pumping and ventilation systems, and we actually re-accessed that area in June, so big check mark to our operating team. Thank you very much. Mother Nature threw you a curveball and you dealt with it really well. We reopened that area and started mining again in the first week of July, just in time for lightning to strike our electrical substation, which knocked the power out to the mine, and the mine flooded again. So we did repair the electrical circuits in July. We dewatered the mine again in July, and since the end of July, the mine has been slowly but surely crawling back to good health. We are about 9 months behind our mine plan at Guanaceví, and it's going to take another 3 quarters to get back to where we were, but this mine has for many years been a cash cow for the company, and we fully expect to return into the black here at Guanaceví. So it's our largest silver producer. 2 million of our 5 million ounces each year comes from Guanaceví. We're in the 5th largest silver district, and we have 2 mines currently operating at Santa Cruz and Porvenir Norte, 2 discoveries in development for production next year, Malache and Santa Cruz Sur. It's the only mine that's fallen behind plan for the year. That's really impacted our financial and operating performance, and notwithstanding that, we're having a profitable year. So not bad considering all the troubles that we've had. Those troubles are now behind us. Moving to our second mine, purchased in 2007, Bolanitos has been our lowest cost mine for many years. It is our cash cow. We pull a lot of cash out of this mine every year. It'll produce about 1 million ounces of silver and 20,000 ounces of gold this year. It is the red properties in the west half of the 2nd largest silver district in all of Mexico. It is being optimized. We think we can get more recoveries out of the plant, but really the main headline news from Bolanitos is that the cash costs here are negative. In other words, the gold that we produce covers all the costs of the mine and then some, so the silver is effectively free. On an all-in cost basis, including general administration, exploration and development and royalties, on an all-in basis, the operating costs at Bolanitos for the first 9 months of this year were $1.89 per ounce. So again, a prolifically profitable mine. Moving to our third mine, El Cubo, purchased in 2012. This is now our biggest metal mine. It produces just under 4 million ounces of silver equivalents per year. This year we're scheduling about 2 million ounces of silver and 23,000 ounces of gold. It was also our biggest operational turnaround. This mine, when we bought it, had costs up in the $42 per ounce range. We single-handedly brought those costs down to $12.50 in 2016. So it is our largest mine. It's become a core asset that we always envisaged it would be. It's not our most profitable mine, but it makes good cash flow. Now for the fun part of my presentation, we're proposing to roll out 3 new mines over the next 3 years to grow our production by more than 50%, and interestingly enough, shrink our costs by almost 50%. The development of our 4th mine, El Compas, was featured on the first photograph, the cover photograph. That was a shot of the mine under development. The other half of the story at El Compas is that we actually, at the bottom of the bear market, took a 10-year lease on a 500 ton per day plant for $7,500 a month. To build that plant today would be $20 million, and we've got it for basically $90,000 a year. That's classic value creation by your management team. El Compas represents our near-term production. We're initially modeling a very small but high-grade mine, very accretive to cash flow, doing about 1 million ounces of silver equivalents per year, and with an all-in estimated cost of production of less than $10 per ounce. So it'll be accretive to both our production and our costs. We control the southern end of the 3rd largest historic district of Zacatecas, with the properties shown here, and the mine is the Compas property at the bottom of the slide. Our plant is kind of in the middle of the slide, and it's on the other side of the city of Zacatecas, so it's about an hour's drive from the mine to the plant. There will be news, drilling news, new discovery on a property called Calicanto right adjacent to the plant, and you look forward to that over the next couple of weeks or so. And what we hope is that we can find and develop a second mine here. The reason is that the Compas mine only fills half the plant. The plant capacity is double the mine capacity at El Compas. And if we can find and develop a second mine here, we'll be producing 2 million ounces a year instead of 1 million ounces a year. So there is an implied expansion in our future at El Compas. I mentioned already the all-in sustaining costs, and we published an economic study at the end of March, the results of which are shown on this slide. 42% after-tax rate of return, so a very robust economic proposition at El Compas. Mine number 5 is the jewel in our pipeline. Terronera, we purchased in 2010 for $2.5 million. We found a 60 million ounce silver equivalent ore body, still growing. We did a pre-feasibility study at the end of March on this one, and it will now become our largest mine at 5 million ounces a year for 10 years with all-in sustaining costs of operations at less than $5 per ounce. This mine will single-handedly take our production profile to 15 million ounces of silver equivalents per year and shrink our costs below $10 per ounce on an all-in basis. So very important new core asset for us. We own an entire district of gold-silver veins that were mined off and on up until the Mexican Revolution in 1910. Nothing happened for 100 years, and since we acquired it in 2010, we've been making discovery after discovery here at Terronera. That's a picture of the first 60 million ounces wide open at depth and along strike. It averages 6 meters thick. It averages 400 grams silver equivalents per ton, so that drives pretty attractive economics. We've already purchased the land for the mine, plant, and tailings, and we've already received the permits to build the mine and the plant. We're still waiting for 2 permits. The tailings and dumps permits are coming soon, and as soon as we receive those, we will commence construction next year on our 5th mine for production in 2019. Last but not least, barely 12 months ago, I purchased mine number 6 for $6 million. This is a famous district in southern Chihuahua called Parral. At the Veta Colorado, which is the pink blob in the middle of the slide, there was a 4 million ounce per year silver mine up until 1990. That mine closed. A new owner bought it and sat on it for almost 2 decades. We bought it last year. The area of the Veta Colorado mine contains 32 million ounces of silver resources, historic resources drilled out by the previous owner. We just released last week a second new discovery in the Palmilla area towards the bottom of the slide. Palmilla looks like a low-grade open pit above the high-grade mine that in the late 1800s produced all of the silver for the Mexican mint. So all of those beautiful Mexican silver pesos, they came from the Palmilla mine in Parral. Last but not least, we're drilling now in a 3rd area called San Patricio, and look for that drill news later this year. Lots of targets to find more and more resources at Parral. We hope to finish an initial resource in the 1st quarter, an economic study in the 2nd quarter, permitting in the 3rd quarter. We'll keep drilling all the while to grow the resource base at Parral so we can make a production decision in 2019 for production in 2020. Moving now to relative valuation, the troubles at Guanaceví hit our stock pretty hard. We're down 50% on the year to date. And on a relative basis, these are all the silver producers worth knowing, and we're the red bar, so no matter which enterprise value metric you look at, we're cheap. And it is a very attractive time of year to own this stock. Shareholder information, we have 127 million shares out, trading at $2 US, 260 million market cap, 2.2 million shares a day, $70 million working capital, $44 million cash, no debt. So we're in great shape to grow this company. We have a number of short and medium-term catalysts to deliver shareholder growth. First and foremost, getting Guanaceví back on track over the next 3 quarters, completing the development and starting the production at El Compas, our 4th mine, finalizing the permitting and breaking ground on our 5th mine at Terronera, and continuing to expand the resource base at Parral. So all in all, when you buy Endeavour, what you're getting is an experienced board and management group. We've established now a 13-year track record for accretive growth. We do from time to time make strategic acquisitions, and we turn them into core assets. All of that adds up to the best organic growth profile in the sector. Thank you very much.